This is a Stock Trading Reality Podcast, episode 83.
It went from 30 to $20, and the thing is, it never actually came back up. It continued downwards for a couple months. So I kept buying and averaging down until eventually around the beginning of 2016, I was down probably $3,000 on the position. I had nearly 1,000 shares.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. His favorite candy bar is Butterfingers, Clay Trader.
Yes, I absolutely love Butterfingers, especially if you crunch them up and put them on like vanilla ice cream, or really any ice cream for that matter. As far as I'm concerned, Snickers would probably come in a close second, but Butterfinger, definitely my favorite candy bar. And I could eat them every day, but that probably wouldn't be a necessarily good health-conscious decision. Chazs, who is our co-host, by the way, what is candy bars? I mean, what's I won't narrow it down to one, but what are some of your favorite candy bars out there?
Celery and carrots.
With peanut butter on them?
I wish. No, I actually, it's funny you kind of mentioned the Butterfinger because I actually just had some of those this past weekend on my cheat day on Saturday.
Okay,
I'm more of a Snickers guy personally, but I'm kind of in the same boat with you. Throw some ice cream with it, and ooh man, what a good treat!
It is. It is definitely very, very good. So, well, today we have a great pod. Well, I think it was great. There was a whole lot of good nuggets in there, and I'm confident that even if you're not new, you can just you'll get a few good friendly reminders of things to just be aware of, as you proceed with your trading. But today we're talking with David, and he is a member of the chat room. Goes by the same name in the chat room. So if you've seen him, he's quite active. So I'm sure those of you that are also active have seen him. But a quick little history here. It's been a while since I've done this, and I like to do it every now and then. But hey, Clay, hey, Chazz, why are you only interviewing members of the community? I mean, what is this? Some sort of like just massive sales gimmick or something? Not at all. In fact, at the beginning, the whole idea was, we're just going to talk to members of the community, try to motivate, inspire, just share with one another. But then it was kind of just like, well, I mean, I guess if we open it up and other people can benefit, that's cool too. So the original idea was never to have any of this be public, but it ultimately is public. However, we are still keeping it with just the members of the community. So that is why it may appear a little biased that we're only talking to people that are, seen in the chat room or that, are just in the general community. But that is kind of the evolution of, where all this started and where it came from. And I like to do that every, 5 or 6 podcasts, just for those new listeners out there that can kind of understand why that is indeed the case. So like I said, talking with David today, fantastic interview. So let's just hop right in. Hey, David, welcome to the show.
Hey, thanks for having me.
Now, we were just discussing for, I don't know, I'm exaggerating, but like 20 minutes. First off, David is by far the best podcast guest we've ever had, simply for the fact that he is currently a student at The Ohio State University, which is my alma mater. So as far as I'm concerned, he could come on here and bash me the whole time, and he's still going to be the best guest ever. So we were reminiscing. I was asking him about his schedule and seeing how much it maybe changed. And then Chazz, being the good accountability partner, the good co-host that he is, said, you are just totally reliving your glory days right now. And it was kind of pathetic that my glory days were like, hey, what time is that class and what days? And it was bad, but I couldn't help
Clay
it.
grab his backpack and throw his notebook in there, and then he's like, "Oh wait, I'm already out of college for a long time now." But yeah, it's kind of funny.
Yeah, it's true. I grabbed my little lunchbox, put an apple in it, one of those little cartons of milk or chocolate milk. It was great, but we are not here to relive the glory days of college. So we're here to talk trading. And full disclosure, all other guests, I'm pretty sure, might want to fact check me, but I think this is not the first time that we've ever really talked, because last night, as of the recording of this interview, obviously, I interviewed David for the live webinar that is a part of the Clay Trader University package. So I have talked to David before. I really don't know much about his story. All I know is about one of his trades in detail that he talked about last night to all the members. But besides that, I don't know anything about him. Chazz doesn't know anything about him. But technically speaking, this is not the first time we've ever talked. So, but still, I think that we're all going to get a lot out of it because I really don't know anything about him other than he goes to the greatest college, in the United States. So, David, let's just start at the very beginning. What got you interested in the markets? Kind of how did you hear about it? And then, kind of what got you interested enough to really kind of think about and pursue putting real money into it?
Yeah, so it all started when I began working for a political campaign of a family friend, and their family, there are a lot of lawyers in their family, and they had a law practice. So after the political campaign, I ended up being hired at their law practice. And the interesting thing about it is that they don't practice law most of the time. It's they mostly invest. So they're great investors, great real estate investors. And they ended up telling me, hey, with the money that you're earning from working here, I want you to open up a trading account. So I was thinking, oh, that'd be a great idea so that I can make my money sort of work for me.
And so I guess an obvious question would be is where do they kind of try to steer you to do that? Because obviously, it's a good idea to kind of put your money to work for you. But what kind of strategies were they thinking? Was this kind of long-term holding Warren Buffett value investing type stuff? Or were they kind of swing trading? What kind of trading were they doing?
Yeah, so they were strictly fundamental investors. So they were looking at all the financial statements, all the company data, and it was interesting to see it from their perspective because that's how I traditionally thought investing was. It was always you got to look at all this different fundamental data, and it's a lot, and it seemed like a lot. So they wanted me to open up an account. Are we allowed to mention broker names?
Oh yeah, please, by all means.
Yeah, so they told me they had an E-Trade account. So
like,
hey.
Here we go. Here we go. Chaz, I refrain. No, you're not allowed to talk about. No, that's fine. So E-Trade is their broker of choice.
And even from the beginning, I realized that commissions will eat you alive. So that was one of the things that I should at least give myself a little credit for. So I did some research and I ended up opening an account. I was 17 at the time, in my dad's name at Options House.
Okay, so I mean, you're in college now, obviously, as we have established. So let's backtrack just a tad. When did you start working for this political campaign? Was that at age 17, or was it a few years before that? Because that's pretty sweet that you already had people encouraging you and you actually listened to that advice and are getting involved in the market at age 17. Or did you actually get started even before that age?
No, so I was first trading at 17, but my involvement began with them at 16. So pretty young.
And this was a paying job, right? That you weren't some like political volunteer. They were paying you the whole time?
No, so the political campaign was totally volunteer work, but at the law firm, I was an employee, paid employee.
Okay. So you basically had at least a year's worth of time to save up funds. Is that right?
That's so not quite a year. It was probably a couple months though, like 3 months.
Okay, to save up some funds, and that's what got you started. So where I was going there is, I mean, Chaz and I, we come across people quite a bit. Hey, I got $100 and I want to do this, that, and the other. And it's like, okay, sometimes you gotta, you can't just take $100 and then all of a sudden explode it and have a good trading account. Sometimes you got to go get a job. Sometimes you got to work. So good point, or, good to hear that you actually build up some capital by working, not just saying, here's $100, let me just all put it on black and roll the dice and see what happens. So you went, you did the old school way. You put your hard hat on and did some work. So you get funds. You decide, you know what? I value these people's opinions at the law firm. They're telling me to get my money to work for me. And you open up E-Trade. Now, something that you said was you realized pretty quickly that the commissions were eating things up. But when Chaz asked you about what sort of strategy, they were advising more of the long-term fundamental stuff. So, and from my perspective, I have nothing against E-Trade. If you're straight up just going to invest and like, okay, I'll sell this in like 20 years from now. Okay, that $10
is trade really 5 times a year. Yeah, it doesn't really matter.
Exactly. But it sounds like you were maybe not necessarily taking their advice, or were they telling you to invest, or did they want you to like actively trade? I mean, not necessarily the strategy in turn. Obviously, they told you they want you to use fundamentals, but what about time frame? Were they saying, yeah, you should be buying and selling within every couple of weeks, or touch base on that again, because I'm a little doesn't quite add up in terms of how you noticed that E-Trade commissions were killing you if you're only going to be trading, like Chazz said, 5 times a year.
Well, I didn't open up an account with E-Trade, so I ended up with Options House from the beginning because I did research. I realized that commissions were sort of killing them, but the amount of trades they were doing weren't enough for it to really matter. So $5 a trade was my commissions, and the time frame that we were looking at was. They didn't really give me a time frame, but I realized that I wanted to be in and out, within a few weeks of a position, hopefully.
Okay, so now I like you even more. So at the end of the day, you're just a cheapskate, and you're like, hey, if I can save $4 even over the long term on commissions, then I might as well just save $4. So that's essentially whether it was 10 years or 10 minutes, you just wanted to save as much money as possible. Is that kind of how you ended up at Options House then from E-Trade?
Exactly. So definitely. I realized that the commissions would have just it's throwing money away really at any rate, and it's the same system. I'm buying the same stocks, selling the same stocks. So I realized that I needed to make sure that my commissions were as good as possible, and that's the best commissions that I could find at the time when I was 17.
Okay, and then you said you to kind of decided that you would want to hold, maybe for a couple weeks. Where did this time frame come from? Did you just pull it out of left field, or is there some sort of more context? Because at this point, it seems just kind of, I'll go 2 weeks. But
he's
where
17
exactly?
And he wants a portion a year, so he's trying to get in and out and make a bunch of money.
Yeah. I think Chazz might have just nailed it there. But yeah, so where did this whole time frame actually come from? From your perspective.
Well, I was looking for it to just be holding for a few weeks, because basically I would enter into a position. I first started trading in the fall of 2014, probably around October, November. So I realized that oil was crashing, and the fundamental sort of picture I was coming from was that, oh, look, it's there's a lot of people selling and there's a lot of panic selling. So I was going to kind of go against the trend and buy when people were selling and sell when people were buying, because I sort of understood that market psychology back then. So the amount of time I held really depended on how much money I would make. So I would buy in on a strong pullback, and then I would sell my position whenever I would make $100.
So that was pretty much, that was your strategy. It was pretty much to reach $100, cut the trade off, and then just wait for another deep pullback or overextension of some kind. Is that right?
Yeah. So just look for another big red day, lots of panic selling, and then I would buy into that.
Now, if you don't mind disclosing this, what size was your account at that time?
$500.
Okay, so I mean, $100 on $500, that's a good size, growth. But at the same time, did we ever have any thoughts as to stop losses, where you would say you were wrong, where you would tap out? Was this even a thought in your head, or was this just kind of something you're going to buy this pullback and no matter what, you're waiting until you make $100 or that account is gone?
Exactly. I was really hoping for it to start to go up. So I would just wait for the $100, and as long as it took.
I'm sorry. Did you say a word that started with H? Say that again.
I was hoping for it to go back up. So really, I honestly would look at the financial statements. Like I would say, and I'd look at the CEO names and be like, you know what? I like this company. The big one that I started into was Whiting Petroleum, WLL. It's an oil company.
Yeah, are they a penny stock yet? I see them all the time on my rate or my scanners. New low. I'm pretty sure they're at like 5. What price were they at when you were trading them? Because right now, I'm pretty sure, Chazz, could you check this? I think they're at like $6 right now or something like that, maybe 7.
Yeah, so it was, when it first came up on my radar, it was $40, and that's when I didn't know it at the time, but that's when the lawyers were buying into it. So let's see, 40, and they actually had a decent sized position. So I think they bought 100 shares, so it's like $4,000. And I was thinking, you know what, I'm gonna wait till it pulls back a little more. So I ended up entering in the $30 range, and then let's see, I would go all in with my buying power. So I would buy everything that I could, as many shares as I could with that buying power.
And you said this was in 2014, right?
Yeah, in 2014.
Okay.
And I would wait for it to bounce, and then I would sell once I made $100.
So for our listeners out there who don't have the chart up right now, for perspective, I'm looking at the monthly chart. Whiting Petroleum went from $50 to $90, and then from pretty much September on went from $90 and is now trading at $7. So obviously you said you like this, and you said, would you look up the CEO and stuff like that, and their reports, things like that?
I did not know what I was doing. I would just look at it. Oh, that income is, this cash flow is looking pretty good. Yeah, this $1 million. I had no idea what I was doing. I just you could have put just random numbers. I've been like, interesting. Yeah, that's good.
Ooh, I like this balance sheet. This looks good. I'm going all in here. Now, I guess something I really wanted to ask, but I don't know if you, like I said, you're free to share whatever you can. Did you ever run your ideas by the people you were working with at the time? Did you ever kind of, ask them, hey, is this smart, or is this what should I not have held this, or is this company bad? Did you ever kind of, poll the room?
Yeah, so I would ask around sort of, hey, do you guys like this company? What do you think about this? I know a lot of people ask Clay, hey, what do you think of this stock? And then Chazs in the chat room, he'll say, what's your position? What's your holding?
That's my favorite question. It's the first thing I always respond with is, what's your position? Because when you say you're long something, I now know why you're pumping it, and when you say you're short something, I now know why you're bashing it. But I'm not saying that we actually pump or bash in the room, but I can always tell who has a bias and who doesn't.
Yeah, for sure. So I was dabbling with Whiting Petroleum, and I was pretty lucky, honestly. I would say it was all luck. I would make a few $100 here and there, and then once I turned 18, I ended up opening a Roth IRA. I realized the tax benefits of it for U.S. citizens. So my parents said, hey, with all the money that you've made, you need to just put it all in your Roth IRA. So I still kept that the Options House account in my dad's name, just as a sort of normal trading account. And I switched all my positions, all my capital into my Roth IRA, and I ended up buying Whiting Petroleum, let's say, in the 20s, and things did not go well after that for a while.
And I want to kind of circle back to that whole hope word. And, when I asked you, where did this, time frame come from? So correct me if I'm wrong, but the way I interpreted all that was that, well, it was 2 weeks because that's the ideal time frame that I figured I could make $100. But theoretically speaking, that 2 weeks could have been 2 months if it took that long for the price to go back up to make you $100. Is that also is that kind of a fair assessment of what you're trying to do? Yeah,
that's definitely very fair.
So in other words, there was no guarantee that was ever going to make you that $100. So you were literally, to your credit, you already acknowledge it, but you were buying and then hoping, and your whole time frame strategy was, well, I hope it goes up and gives me $100, and hopefully, I'll say 2 weeks, because that's what would, $100 in 2 weeks, that'd be great. But if it would have just kept crashing on you, which I think that's where we're headed at this, or right before you let me take back over on the question here, but it sounds like you were always on very, very thin ice, and obviously you didn't realize you were on thin ice, but it was just 2 weeks was coming from what you hoped for in the best case scenario. Is that essentially where the number ultimately came from?
Yeah, that's definitely very fair. And if you take a look at the chart during 2015, during the first few months and into the summer, it was very doable to buy into pullbacks, and then it would pop back up and make me $100 bills.
And it's always doable until it's not doable anymore. And all of a sudden, to Chez's point, way back when he asked you about the stop loss, well, that's when it becomes a problem, because, well, it's not doing what it did the first 9 times, but that 10th time, if there's no stop loss and you're just sitting waiting, kiss those other
time it goes from 35 down to $7, and yeah, you tell me you're gonna wait until to go back to 35. But yeah, it's the one time that it doesn't do what you want it to do is the time that can wipe you out. That's for sure. And I'll throw in the show notes the Clay's average down video. I'm not saying you were averaging down or anything like that, but it's a great example of the one time it doesn't go the way you need it to go, what it can do to you.
Yeah, absolutely.
So I actually one time I actually did average down when I had that Options House account, and I bought into a position, it pulled back some more, and I said, you know what, I'm gonna go all in. So at that point I funded my account with I think $1,000 more, and I ended up buying the same amount as my position, and then it ended up bouncing, and I was able to get out at better than my average price. So
did you make $200?
I think I made $100 on that still.
Okay.
So-
Double the risk, same amount of money. There you go.
Yeah.
Go ahead, Clay.
So let me ask you this: was that a good win or a bad win?
Hey, it was, as far as I was concerned back then, it was a good win because it was $100.
Well,
So,
not knowing what you know now, was that really a
No.
win or was it actually a loss?
it was developing very bad habits.
Booyah. See,
Yeah.
Chaz, when you go to the Ohio State University, you answer
knew you
these
were gonna go
questions.
there.
You answer these questions flawlessly. Absolutely nailed it. And we'll also link in the show notes. Not all wins are created equal, which is the most important video I've ever created. And I've created hundreds of videos. And that one is the most important, like I said, one I've ever created. So go to the show notes or just go to YouTube or the site. And all wins are not created equal. Watch that video because David nailed it. Sure, you would think that it was a good win because, hey, he went and he ultimately got the victory. Well, all the things you did, you went, not only did you average down, but Chaz, did you catch the one part? He put more money into his account to average down. If you are dumping more money into your account to average down, Chaz, that's probably not a good thing, huh?
It's usually not a bad thing, and it's the same when you get a call from your broker for a margin requirement that you're a little bit short and you have to put more money in your account because you're running a little light. These are two things that you don't generally want to be in the position of.
Yeah. So, but now was that one on the WLL or was that a different stock that you did all that stunt on?
Yeah, so I played just the same stock for a long time. I only played WLL for the most part.
Okay. And way back when you had mentioned $20 and then, WLL was at $20. And I felt like that's when the journey was really going to start to kind of crumble around you. So let's go back to that point and what exactly happened then.
Yeah, so if you look in, let's see, July of 2015, I watched it pull back a lot. I watched it go down $10 in a day, like a gap down $10. And fortunately for me, I was out of it. I was just thinking, wow, these longs are getting crushed. Look how bad it's getting. So I actually ended up buying more somewhere around that time period. And it went from 30 to $20. And the thing is, it never actually came back up. It continued downwards for a couple months. So I kept buying and averaging down until eventually around the beginning of 2016, I was down probably $3,000 on the position. I had nearly 1,000 shares in my Roth.
Now, is this?
No. I'm taking this one because this is a very important question. So we're actually, I didn't want to announce it. Clay didn't make the video yet, but we're actually pivoting this podcast to a psychological, emotional, touchy-feely type podcast. So I want to know during this whole time period that you're holding, which is, at least 6 months from what I'm looking at on the chart, how do you feel about this position? Are you blocking it out of your mind? Or are you just saying, well, when I get my next paycheck, I'll just add another 50 shares or another 100 shares? What is your mind and your thought process about this? Or are you just going to say, I'm holding it and I'll check on it in a year. I'll check on it in 5 years. What's your logic and rationale at this time?
So at that point, when I built into that big of a position, I was very sure of it. So oil was very cheap and I just wanted to buy as much as I could at that point. And I maxed out my account. So at that point I'd say in my Roth IRA, I had like $13,000 in there and I was all in positions and I ended up buying some other oil companies such as MRO, Marathon Petroleum, and Whiting at one point was down in the $3 range. I was so sure of it. I actually, in my options house account, I learned about options and I started selling short puts to generate some income. And that's a strategy that my employer actually engaged in. He told me about that. And I was just thinking, wow. And I know Clay has a video, what's it called? How to Be the Casino. So I was just thinking, wow, these stupid people, they're actually just paying me. And I would hold those short puts all the way until they expired. And I think I got pretty lucky. Honestly, it was all luck. I only got assigned, I think, one time, and I took a small, like $50 loss when I sold those shares. So I actually did pretty well. And same thing with the short puts. I actually would look to make about $100 a week just in the amount of puts I was selling.
I gotta just ask, where did all this conviction come from? I mean, because it sounds like you are just full on bull mode in terms of oil. So was this still from company filings? Was this from coworkers? Was this from reading the headlines? Where was all this just, I mean, Chaz, are you getting the same perspective here that he was about as bullish and confident too in oil? I mean, he was just a believer.
He wasn't even selling calls against his position. He was selling puts, literally anticipating the price to go up and not go down any further. So yeah, it's absolute full-blown bull conviction. So yeah, I agree with Clay. Where did that come from? Did you just say to yourself, it can't get much cheaper than this? This is ridiculously low?
Yeah, I was thinking, wow, $20. What did oil get down into? Like the 30s? At some point, I was just thinking, wow, it cannot get any cheaper than this. This is the point to be buying while everyone else is selling. Just that market psychology that everyone's in a panic, selling their position. I'm gonna be buying. I'm buying. This is the pullback that I was looking for. This is where I'm gonna hit it big.
And we should just kind of clarify here that there is absolutely nothing wrong with having conviction in a trade plan, with having confidence in a trade plan, and heck, maybe even a little bit of cockiness. I mean, I'm not saying you go overboard, but you got to walk around thinking, yeah, I'm confident in this, so you can stick to the plan. But the one portion that is missing from this whole entire conversation starts with R, and it's risk. There has been no talk about controlling risk, managing risk, thinking about risk. So again, if you have conviction and full confidence and all that, and there is risk management in place as a part of your plan, then hey, that's perfectly fine. There's nothing wrong with having a belief in an idea, because risk management is there to admit, okay, I was wrong in my belief. And that's fine. Welcome to the club. So I don't want to come across like Chaz and I are just poo-pooing here on having belief in a thought or, conviction. It's all about context. And in this context, as David's telling us, correct me if I'm wrong, David, but there is no risk management anywhere being thought about, right?
There's no risk management. I was just buying more shares at the bottom, just looking for it to bounce, really just hoping, and just really going on that premise that, hey, it cannot get any worse than this. There's no way.
And before we keep on kicking David, we'll also link this in the show notes. I had a same trade with GoPro in my retirement account, and I explained it all in the blog article, but I have these rules for my retirement account. And I saw a GoPro, and same thought was, oh, wow, this thing cannot get any lower. I'm going to do this, that, and the other, and it's going to be fine. Long story short, it ended up costing me $1,500 in my retirement because I got cute, and I went along with that same premise of, and the thing was, it would have been a whole lot worse, but there were some things with options I did which helped, mitigate the loss a little bit. But still, it was a rule break, and it was along the philosophy of, hey, there's no way this thing can get any cheaper. So be very, very careful because, Chaz, you have experience with that too, right? Have you done that before with that logic?
I have done that before. And to be fair, I can understand why, especially for David, because for the years that he even started getting interested in oil, it was between about $90 and $110. And then he's now trading it as it's in the 40s. So that's like, holy cow, it's a 50% price cut. This is ridiculous. And I actually got to watch it live for you and GoPro. We watched GoPro just literally crap the bed. And it was just like, how could it even go any lower than this? But yeah, you got cute with it. And obviously we'll link that article so everyone can see it. But yeah, it's funny how our opinion can justify like it can't go any lower or it can't go any higher. And it's funny how we come to those conclusions, but most of the time it has absolutely nothing to do with rational.
Yeah, it's a crazy thing. So how did all this turn out? I mean, you are going in big, you're confident in oil. So how did this, trade ultimately, end up for you?
So around the first few months, probably January or February of 2016, it was just sort of an all-time low. And I kept buying shares of different company, like I mentioned, MRO before. I was just thinking, wow, this cannot get any lower. And I learned about covered calls. So I actually did end up selling some calls against some of these positions. And in hindsight, that was really stupid because it was low and I was looking for it to be very bullish. But I wanted to generate some income because I just was down a couple $1,000. I was like, hey, I need to make these positions work for me. So I ended up selling some covered calls.
And let's fast forward to the end because, I mean, I'd love to talk with you for 3 hours here. But so what ultimately happened here? Did you work yourself out of this entire trade? Did you end up taking a loss? Kind of give us the Cliff Notes version from now till the end of the trade when you cashed out.
Yeah, so in March of 2016, it ended up bouncing enough for me to get out of pretty much all my positions and go ahead and buy back my short calls. And I ended up making $2,000 on the trade.
So since this is kind of a theme, was that a truly a winning trade?
No, it was not a winning trade because it just really ingrained like, hey, look, I can get away with this. I can keep averaging down. You just ingraining all these bad habits. And really, if let's say that one of those companies would have gone bankrupt, that would have blown up my retirement.
The one, and I'm not justifying this, but this is why if you're younger, hey, the sooner you get started, the better, because technically speaking, yes, David could have blown up his retirement account. But at this point, you were 18 or 19 years old. I mean, so he could recover. Again, I'm not justifying it, but that's just one of the benefits of the sooner you get started in this stuff, the better, because it just get started as early as possible. We're not going to turn this into a math podcast about the power of compounding interest and all that stuff, but just get started early for any of you younger listeners out there. So you get out of this trade and it's a quote unquote win, but as you've already acknowledged, it wasn't really a win because you just form that many more bad habits and you ingrain them into you. I like the use of that word. So where did you actually go from here? Where's the next step in your journey? Because you now are on all cash. So where did you proceed from this point?
Yeah, so then I ended up looking up and kind of finding out about day trading, and I would just watch these YouTube videos online, and I stumbled across this guy called Clay Trader.
Holla!
And I was like, wow, this guy, he's pulling $50 bills out in less than 10 seconds of the market. I got to learn how to do this stuff.
So what actually got you interested in day trading? Like, did you just randomly hear the term? How did you even know to search for day trading on YouTube?
Well, I learned about how stocks could gap up and down, and I realized that I didn't want to have that much risk because, for example, in my oil position, sometimes I would buy and then it would gap down. I wouldn't really have a chance to get out if I was to even mitigate my risk. So I didn't want to have the risk of holding positions overnight and just being more in control of my money.
And to be fair, that's a completely logical way to look at things. We have a lot of people who strictly day trade, at least in our community, for that exact reason. They don't want to be subject to kind of gap ups, whether they're in your favor. Sometimes they're equally in your favor, when it's completely against you. So you watch this guy do it on YouTube. Now, what is your kind of approach to starting to apply this yourself? Are you going to do this, in the morning from your job? Are you going to do this from your phone with delayed quotes? What is the next step for you after you kind of find out about day trading?
Well, Chaz, I'm sure he's going to say, well, because I wanted to do this properly, I went and invested in education so I could actually learn how this all works, because I don't want to just start trading randomly off a YouTube video, Chaz. I'm sure that's what his answer is going to be.
I'm sure as well. I don't even know why I asked that. Sorry.
Yeah. So translation, Chaz, that was a very stupid question on your part. So, but we'll let David answer because I could be wrong.
Yeah, so I realized at that point that I learned about shorting, and I thought it was really cool. You could make money when the market goes down. So I wasn't able to really have great commissions or to short in my options house account. And $5 per trade, I realized that, wow, these people are coming in and out of position. They're scaling in and out. And I got to find a better broker. And I stumbled across Interactive Brokers. And I ended up funding an account. And then the pattern day trade rule got me. So I ended up realizing that I had to put more money in the account. And anyway, I was like, you know what? This education thing, it's got to be, there's got to be free stuff on YouTube, free stuff on the internet. I should be able to learn how to do this on my own. Everyone that sells these informational products, it's probably a scam. If they say there's some kind of secret, then it's not really a secret if they're telling people. So it's probably not the best system. And I just thought I could learn everything off of these YouTube videos. So I ended up watching I think almost all of Clay's live trade videos. I was like, I'm going to get as much information as I can out of him. And honestly, I did learn a lot of what he was doing. And I think I learned a lot from your live trade videos, but I didn't know what I know now. And it's very, very important to actually get educated the right way. I was doing it the wrong way.
And that's the problem. And with a lot of, not just my YouTube videos, but you can learn a lot of stuff. And then we'll just use mine as an example. Yeah, those live trade, I can't believe you watched all those. There's like 250 of them. But anyways, so watching all of those, yeah, he did learn a lot. But it's the small things that I'm not talking about. It's those small little things that you don't get out of them, which eventually will come up and bite you. So yes, I sell products. So yes, I'm going to, poo-poo on free education. There's lots of good stuff out there if you can find the good stuff. But even if there is, you always got to wonder, is it really giving me the full picture? And maybe it is, maybe it isn't. I don't know. But that's just the uncertainty principle, in the world of, the free content of the internet. So you watch all these videos and you start trading. Like, at what point did you join the inner circle, along all this? Because I mean, you joined, I guess I don't know that. I'm trying to think off the top of my head. I don't know when you joined, but where did that fit into this whole equation?
Yeah, I joined in the spring of 2016, and I realized that the Inner Circle had this great chat room, and that's really why I bought into it. I wanted the alerts, and I thought that, hey, I'm just going to buy this Inner Circle thing. I'm going to be able to see which stocks are moving from the other members, giving these alerts, these good traders that are in the room. And at that point, I thought, what? I'm not gonna have to buy any education. It's just gonna be $100 a year. I'm gonna be able to be in the inner circle, and I'm gonna be able to make money consistently without any real paid education, some kind of formal technical analysis education.
And how? I mean, I had some words for you every now and then. So I mean, how do you recall any of our earlier conversations? Maybe some of the warnings that were thrown your way, not by only me, but by other people. Do you recall any of those maybe?
Yeah, I got called a degenerate gambler. So I was just thinking, and I actually told my parents about this, that, this Clay guy, he's bullying me. He's trying to get me to buy stupid products, and it's just a scam, I think. Like, I know everything I need to know. I don't know everything, but I'm just going to learn as I go, learn as I was trading. And, I actually was doing pretty all right. And
you're doing very well, but as I already alluded to, it's the little things that I knew you were missing that are they'll eventually come up and bite you. So I know we'll get there, but that's funny. Great. Now your parents probably want to have me beat up. So I'll keep I'll look over my shoulder every once in a while. So anyways, that was funny. So you think you know it all. You're going to learn as you go.
I'm just like, it's in his best interest to try to sell me this product that I probably don't need. So
I mean, and to be fair, you were doing very well. I have no problem admitting that. So you're doing very well. So just, I mean, what did anything happen? Wink, wink last night, or I mean, keep on chugging here.
Yeah, so I was actually doing pretty well. I would make some days I wouldn't even trade because I just realized, what, if the setup's not that great, I'm not going to trade. I'm going to just be disciplined. And over, I'd say, the course of 3 months after I joined the inner circle, I didn't have that many losing days. I was pretty disciplined, and I first started out with 50 shares, and I would move up to 100 share lots, and then one day in the beginning of August, I think it was August 4th.
August 4th. I remember the date vividly from last night when we were discussing it.
Yeah, I entered into this this trade. I was trying to build into a position, and long story short, I lost $1,650 in the course of 30 minutes.
And did that wipe away quite a bit of your gains, or what was that relative to the gains that you had been on?
Yeah, so I think the gains were somewhere between $800 and $1,000. It took everything out and then some.
Wait, say that 800
to 1,000.
Oh, yeah. 800. I thought he said 800,000. Sorry, I'm getting old. Okay, so basically, we'll give you the hide side. You had made $1,000, and in one trade in 30 minutes, you all of a sudden lost $1,600. Is that accurate?
That's very accurate. Yeah.
And share with everybody here what you shared last night in terms of kind of those voices in your head, because valuable learning lesson here of just how the psychology can get you. So, I mean, what exactly was going on in your head that kind of just that opened up the floodgates of what we learned last night? Was rule breaks all over the place and all that sort of stuff. But what was that initial kind of ignition up in your mind?
Yeah, my ignition was, I'm just going to get into this position. I'm feeling pretty good about this entry point, and that I didn't have a losing day in a long time, probably over a month. And I was just like, you know what? I don't have red days. I don't take L's. I don't take losers. We're just gonna make this work. It's going to work. We'll finesse it. We'll manage the trade.
And if you want to learn more about the trade and all the rules you broke and how we should have approached it, then hey, sign up for the Clay Trader University, and you can watch episode 101 of the live web. Chaz, that was a great lead-in for a sales pitch.
That was great. I thought I was going to have to
was.
use the episode number, but I mean, you got it off the top of your head there. You're a real professional here.
I mean, it's just and so anyways, in all seriousness, the trade did not go well as you $1,000 in winners over the past, month and a half, whatever it was, and then
3 months.
in one trade, 3 months?
Yeah.
Holy smokes. Okay, so 3 months, $1,000, and then in 30 minutes, bam, all those gains gone, minus another $600. So at this point, and I'm not trying to rub it in by any means, but because I do somewhat feel bad about degenerate gambler, but looking back and reflecting, I mean, do you think you were kind of doing a lot of gamblish things? I mean, looking back now in hindsight.
Yeah, definitely. So I knew a little, like just enough to be kind of dangerous, just enough to think that I had a system down. But just from watching your YouTube videos and then comparing those to the videos in CTU, I'm telling you, it's not a scam. Like you say so much. You're so quiet, like Chazz mentioned. You're so quiet in the YouTube videos compared to what you say and all the little things, the little nuances that are gonna either make or break you as a trader. In CTU, you really explain those all and go really in depth and into detail with those.
Now, really what's pressing on my mind is I can't believe you got your parents involved. And, so have you gone back and told them that, all right, this guy's, he's still partially a scumbag, but I mean, have you at least told him that he's not a total scumbag? Have you shared that with them at all?
Yeah, I explained. I was like, hey, I have to buy this this new program. And they just said, you know what, it's your money. You're gonna do what you're gonna do. And I explained that there's just so much knowledge, so much stuff that I'm learning just going through the courses in CTU that it's definitely worth it. And I'm still trading on paper right now, but I'm looking to get back into real money after I get a good amount of time on paper, just
Excellent.
with all this new stuff I've learned.
Excellent. So do you think your parents will listen to this or no?
This podcast, I'm gonna send it to them. We'll see.
Well, if they do, David's parents, hey, you're raising a great son. You sent him to the best. This is for Chazz. You sent him to the best university in the entire world. So, I mean, well done.
David's dad, cancel your search for the hitman.
Yeah.
It's all turned around for David now. It's okay.
Chazz totally just translated what I was saying there. After that hitman. I mean, I've been living in a bunker for the past, and I just watched 10 or 13 Cloverfield Lane. So now I'm in the kick of I should build a bunker, but that's besides the point. So where are you at? Right. Well, you kind of just revealed your paper trading. But I mean, paper trading, what are you looking at? Options? Are you still looking at stocks? What exactly are you kind of focused on right now at this particular time?
So right now I'm focused on stocks, just equities, $10 or more, and just trading the underlying stock. I haven't gotten to the options yet. And you know what? I don't plan to yet, but yeah, my focus is definitely stocks right now.
And the beautiful thing about it is that, honestly, trading stocks or options or Forex or futures or whatever you want to trade, the underlying will apply across all of them. And that is that you pretty much need to know how to read charts with technical analysis. That's just our tool. If you read the moon and the stars or whatever else, then good for you as long as it works. But the second one that applies to no matter what you use is going to be pretty much your risk management. So those are obviously what focus things that you need to focus on practicing on for everybody. And this isn't just for you specifically, it's everybody. Risk management needs to be kind of at the forefront for that, regardless of how your entries and exits are kind of planned. But what would you say are particularly your strengths or your weaknesses, especially in your trading? And I mean, you can compare that to when you kind of first started to now, or you could just kind of talk about what they are now.
Yeah, so I would say that one of my greatest weaknesses now is that I'm not hoping anymore. I'm using a system. I'm actually getting educated. I have an idea of what I'm doing because I'm going through these courses versus just buying in, kind of just going whichever way the wind blows with the trade.
Is it safe to say, and this is coming from last night's interview, but you now have a lot more respect. You have a lot more awareness of the rules that go into a plan, because, the one that broke your back, as we, talked through and discovered, I mean, you just threw all initial rules, initial plans out the window, and it just got really nasty. So, I mean, do you think that's probably one of the things you learned the most, and hopefully is becoming one of your strengths, is you now really realize just how important it is to respect rules and not start to get, finicky with them?
Yeah, definitely. And just also to add on to that, just having good rules. If one of your rules is just, I don't even know if it would count as a rule, just, you know what, we're going to make this work. You're not allowed to lose. That's probably a bad rule. But just, yeah, going into the trade plan with a real good plan that's, that, is a system that's going to work, or not guaranteed to work, but high probability of working, that's really important, and sticking to it.
That's actually a great point, is because it goes back to the whole, practice thing is, practice does not make perfect. Perfect practice makes perfect. And to David's point, just because you have a rule doesn't mean it's really a rule at all, because if it's something stupid, then it's just, setting yourself up for disaster. So valid point there, very good point, that your rules actually need to be good, logical rules. And that's just one of those things where, the stuff on YouTube, fair warning, I'm not giving you the whole picture. And I have no problem admitting that's totally by design. That is tip of the iceberg type stuff. It's to get you interested. It's to get you wanting to learn more. And so that, you maybe decide to join our community or whatever. And like I said, I have no problem admitting that. So, but that's a classic example there of you thinking you're coming up with rules, but for all you know, that rule doesn't even make any sense. So strategy-wise, let me ask this. What does your chart actually look like? I mean, do you have a lot of indicators, or is it pretty straightforward? Walk us through what you have on your technical chart.
So right now it's a lot of different indicators, volume, and just the chart, and some level 2s. So just pretty typical stuff that you would see.
Well, you said a lot of indicators. I mean,
yeah, elaborate on that.
Yes. I think Chazz and I
20 things you have on your chart.
Yeah.
So just moving averages, different bands. I don't want to give anything away to any freeloaders, because we're all competing against ourselves.
Look, against each other. Guy. I promise I've not paid him at all for any of that. But I mean, so when you say indicator, you're talking about moving averages, Bollinger Bands, stuff, volume bars, candlesticks. You're not like talking about chalk and money flow and the RSI and the stochastics
Ichimoku.
and Ichimoku, Gaka, Gugu, whatever those one clouds. You're not talking about any of that stuff, right?
Right. So I'm not using like MACD, stochastics. I'm just using moving averages, Bollinger Bands, volume, and the candlesticks, level 2s. That's it.
Pretty boring there, Chazz, huh?
Super boring, and that's obviously the best way, because when you add a bunch of crap, you're trying to make something out of nothing. But obviously, it's been an absolute pleasure having you on, David. Thank you for sharing your story and kind of the ups and downs, and even when trades worked out, how they're not necessarily good trades, but obviously it's been a learning experience. And I think it's really cool that you kind of started that young. I wish I had gotten interested in the market at that age and kind of had some people to bounce ideas off of. But I know the whole reason you are here today is so that you could borrow my time machine and go back and give yourself one piece of advice when you started trading. So if you were to do that, what would the advice you would give yourself?
You gotta get educated. You cannot just pretend to be some kind of great investor like I thought I was. Yeah, it worked out for me in my retirement account, but I'm telling you that if you don't have the education to fall back on and realize what's going on in the chart, then you're just setting yourself up to make bad habits and for failure.
And there it is. I fully agree there. And you're a great example. And before I forget, David last night on the webinar, he was totally honest. He was totally transparent. Nobody likes to talk about a losing trade. Nobody likes to talk about a losing trade that really kicked him in the teeth like he did. But he did do that. And, he's doing that right now on the podcast by just saying, yeah, it was really good until that one time when it's not really good. So I do appreciate all that transparency and honesty. But let's move into the fun stuff here. And the stuff that in my mind is the only stuff that really matters. But favorite movie?
I don't know. The Big Short was pretty good. That was really entertaining.
I did actually enjoy that. Clay, did you see that yet?
I did see that, and I thought I knew it because I also invest in real estate. So I thought I knew how that all went down, but I did not realize a couple of those things about how the banks just straight up like manipulated the markets until it was convenient for them. And then they let it become a free market all of a sudden. And it was that aspect of it was extremely interesting. But yeah, Big Short, whether you're stock trading or into real estate investing, I mean, that's a great movie all the way around.
I thought it was pretty cool that they would literally create a product because they're like, oh yeah, this guy's totally screwed. They're just like, yeah, like we're gonna make this for you, and we'll take the other side of essentially your bet. But yeah, what were you saying, David?
Yeah, I was thinking that I really wish that I knew about real estate investing in 2008 when this all happened, because just again, when you know what's going on and how to play it, there are some really great deals in the real estate market for sure as well.
Yeah, no, I got pretty much my entire portfolio, I think in 2010. So I didn't nail the bottom, but it was pretty close. And yeah, it was just pure bloodshed, and an instance where it's, that's where real estate and stocks are different, is because a real estate is just a piece of property, or no, a stock is just, wow, I'm getting all backwards. A stock is just a piece of paper, but a real estate is dirt, and dirt is always going to have some sort of value because it's land, right? So when you see all the prices getting that low, it's just like, this may not be the bottom, but you just got to go for it. And, buying when there's blood in the street. So that is the one big difference between the real estate market and the stock market. Is stocks, it's all pieces of paper, but real estate is physical dirt. So there's a tangible asset there. But how did we even get here, Chaz? I'm confused. You're up for the next question.
Yeah, we got there off the movie. But David, what would you say is your favorite meal and dessert?
Let's see. I really like mac and cheese, and I'd say my favorite dessert would be ice cream for sure.
Now, shame on me. Why can't I think about the great German food place down in German Village in Columbus? What's that place called? Schmidts, is it?
I've never been there.
Oh my god! Hey, your assignment: get to Schmidts, get the all-you-can-eat buffet. It's good. Get down to German Village. You'll thank me later. I promise you. So. Let's see. What do you like to do for hobbies, fun outside of the market?
Let's see. I play guitar, and then also I run a kind of consulting business on the side where I go around and I speak publicly and I make YouTube videos. So kind of interesting.
Now, David, before we let you go here, what are 3 words you believe should be associated with successful traders and trading?
I would say education, the persistence of it, and management of the risk.
I like it. Technically, you broke the rules, but that's okay. Well, you're a Buckeye. You can do whatever you want in my eyes. It doesn't even matter. So, but excellent 3 concepts there for sure. So, are you sick of me yet, David? I mean, we talked last night. Now you had to talk to me today. I mean, are we still somewhat friends?
Yeah, we can be friends.
Excellent. And jokingly, but also very serious, I mean, to you listeners out there, and Chaz and others can attest, not only myself, but we really beat the crap out of David in the chat room. I mean, a lot of us saw the path he was going down, and we were just, I mean, I was haymakers. I was winding up and throwing punches. And because I mean, as I told him, I said, look, David, I understand. I was a college kid once. I almost said I was a guy. I was a college kid and I am a guy. So I understand the whole ego thing. I understand thinking you know it all and got it figured out. And I said, you're going to get kicked in the teeth. You're going to get kicked in the teeth. And other people are piling on. But to David's credit, he took it. He didn't necessarily listen to it right away, but he took it. He stuck around and he admitted, you know what, maybe, the chat room was kind of right. And he has since corrected that. And he's, well on his way. So David, props to you, because a lot of people get kicked and beat up and those guys are mean, I'm out of here or whatever. But you took it and you learned from it. So, in all seriousness, props to you, because that's a lot of people take things a little too personal in this business. When the chat room, Chaz, and I want you to comment. I mean, the chat room really just does want people to succeed, right?
Well, yes, yeah, exactly. All we want is kind of for people to succeed. But honestly, it's just a case of tough love. We don't want to see you go down the path that many have kind of gone before, and there's definitely ways to avoid that, and that's what we try to kind of preach.
Yep, absolutely. And I mean, in all honesty, if you show up in the chat room and you're talking this, that, and you're saying this, that, and the other, and everybody's just like, yep, that'll make total sense. Nobody's going to try to cram any sort of education down your throat. The only time that anybody suggests education is when you can see there's some things missing. But it's not like, oh, great, so I sign up and then all of a sudden everybody's going to say, buy this. No, if you show up and your alerts and your comments and the way you conduct yourself is like, yep, this dude's legit, nobody that would never come up at all. So anyways, like I said, and the reason I'm harping on this is because I've dealt with a lot of people, and a lot of people just take things too personally. So David, well done to you in that regard. And also, hey, just overall, thanks for not only being on the webinar last night, but thanks for hanging out with us this afternoon.
Yeah, no problem. Thanks for having me.
We'll definitely have to have you back at some point because this has been for sure a fun interview. For those of you listening, a few final things before you go. If you're listening on YouTube, then be sure to check out the remainder of the channel, lots of different videos and such, and hopefully you ultimately decide to subscribe. If you're listening on iTunes or any of the other podcast players, then subscribe so you can keep up to date on when new episodes are released, especially for those on iTunes. If you can take a little bit of time out of your day, leave us a rating and some feedback. That really does help out the podcast as a whole. And, it just lets us know, helps with the rankings and all that sort of good stuff. So like I said, that would be greatly appreciated. And finally, if you're listening on the website itself, claytrader.com, click that share button, leave us a comment. We do read them. We will reply to them. And, we try to be as interactive as possible. So thank you again to David. Thank you again to all of you as listeners. We'll see you back for the next episode.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.